I'm Charlotte McLeod with the Investing News Network, and here today with me is Rick Rule, investor, speculator, and proprietor at Rule Investment Media. Thank you so much for joining me today in person at VRIC. How are you doing?
Fine, Charlotte. It's a pleasure to be back with you. Thanks for having me back.
It is nice to see you in person. Very exciting. I've been having a great time at the event, although stock market volatility is really, I think, what's been making headlines, and that seems to be something that's on people's minds here. The resource sector hasn't been immune to those movements, and you've spoken very frequently about your contrarian approach. So for you, are you counting this as an opportunity versus a concern?
I absolutely am. What bear markets really are is sales. And if you think that sales are good, then these are good. I'm approaching this one with caution because it's been a really long time since the markets have had a real crisis in confidence. And I'm no market forecaster, but part of me suggests this could get worse before it's going to get better. So what I've done is tried to shape a shopping list of securities and figure out prices that I would be happy to buy them at and ecstatic to buy them at, and scale in, because it wouldn't surprise me if this downdraft went further. For most investors, the young ones in particular, for whom this is their first rodeo, this is merely terrifying. They want stocks to go up. They don't want them to go down. For me, it's a bit more nuanced. The idea that you buy low and sell high presupposes that you bought low, and you don't buy low in great markets. You buy low in bad markets. So on balance, I'm delighted with the way things are shaping up.
Right, and you're talking about it might get worse before it gets better. One of the words we're hearing thrown around a lot is recession. I don't know if we've touched on that together before. What are your thoughts there?
Well, I'm always afraid of recessions. When you have an economy that I suggest has been as much a consequence of both liquidity and confidence as this one has, you're always nervous that when they take, if you will, the vodka from the punch bowl, that the party's over. And it wouldn't surprise me to see a recession. That notwithstanding, Charlotte, I'm always nervous. I joke that I've correctly called 17 of the last 3 recessions. So you probably shouldn't listen to me about nervousness.
Okay, fair enough. So, with all this talk about volatility, recession potential, one thing that I keep hearing, and you touched on this a little bit, is, if you live a fairly long life, you're going to go through these periods, right? So for younger people, it might hurt right now, but you'll probably be okay. What about older people who are not young? This might be, toward the end. How should they be handling this?
Well, Charlotte, I'm an older people. I'm 69.
Yeah.
Obviously I'm closer to the end than the beginning. My grandfather told me once that when I was still a stockbroker, he said, if you have clients that tell you that they're too old to buy green bananas, you remind them next week they're not going to have any bananas. And the truth is that you can't go on strike. You can't stop investing. In an economy where the purchasing power of your savings is declining by 8.5% a year, you can't just put money in the bank. If you're earning 0.5% on a passbook savings account and you're losing 8.5% to inflation, the truth is that you're losing 8% compounded. So while older investors may not have the confidence of time, they have the necessity to stay invested simply so that they can maintain their lifestyle. Between a rock and a hard spot, perhaps, but if that's where you find yourself, you have to adapt to the situation that you find yourself in.
Okay, that makes a lot of sense. So, last time we spoke, I think it was toward the end of 2021, you gave us a really detailed look at the factors driving gold. I think you mentioned 4 of them. There's a lot that's happened since we were speaking then. Most notably, probably, we have a war going on between Russia and Ukraine. So has that impacted your outlook for gold, and how?
This is going to sound harsh, but war doesn't matter much to gold, I don't think. It matters to people on the ground. What matters to gold buyers is the perception of maintaining the purchasing power of their savings. What investors are really concerned about is the debasement of currency, of the purchasing power of their currency in excess of the interest that they're earning on their savings. And in that circumstance, the factors propelling gold are better now, worse for society, than they were at that point in time. We've been through this before, not in your lifetime, but certainly in mine. In 1969, 1970, 1971, all of the indicators of inflation were in place. But people had lived through 20 benign years, and so they still had confidence. We've lived now through 40 benign years in the period 1982 to 2022, so people are confident, despite the fact that they understand intellectually that they're losing purchasing power. It hasn't bit them yet. When it does, they'll be concerned.
Right, and this is something that you often remind us of. If gold is doing well, that means the rest of your portfolio probably is not
Correct.
looking so good. On our last interview, somebody left a comment basically saying, what rest in my portfolio? And so I wondered if you could talk about, that and the importance of diversification.
I understand two businesses. I understand natural resources, which is to say, the gamut, timber, oil and gas, mining, and I understand financial services. So I confine myself personally to those businesses I understand. Most of my investments are in conventional financial services or in natural resources. The idea that someone would confine all of their investments to one area, unless they knew that area extremely well, better than I ever have, is pretty silly. The truth is that I believe that people for the longer term need to be invested in things like very high quality US dividend paying stocks. I believe that people, particularly now, do need to be invested in precious metals and also in natural resources. But the truth is, to the extent that somebody had all of their portfolio invested in gold, unless they knew an awful lot more about gold than I do, which I think is unlikely, they probably shouldn't do that.
Yeah, it just makes me a little bit nervous when people say things like that. So thank you for commenting on that. So you mentioned you've got your shopping list ready during these times. What commodities are you focusing on right now?
The last time we talked, I think I was pretty aggressive about oil and gas. And the easy money's been made in oil and gas, but there's lots of money still to be made. The truth is that the oil companies are deferring $1 billion a day in sustaining capital investments, which means that the production shortfalls are going to continue for longer. The central governments, yours and mine both, are at war with the oil industry, but customers still want their cars to start. So the truth is that, particularly if you're Canadian, investing in the better Canadian oil and gas stocks, the companies that are generating very, very, very high dividends, very, very high real cash flows, are an easy place to be. I continue to believe that gold is the right place to be, if for no other reason than defensive reasons. I'm attracted to the larger general commodity stocks, out of favor names like Glencore and Vale in particular. Right now, I found in the resource space, at least, that the larger, better companies are relatively more attractive than the smaller companies. Normally, the smaller companies are cheaper because of the lack of knowledge about them, but we're still in a very narrative-driven market, Charlotte. And what I found is that the higher quality companies on a risk-to-reward basis are actually cheaper than the smaller ones. So I found myself, unusually for me in my career, gravitating towards the bigger and the best. I suspect that if this current market route continues, that my traditional home, which is the microcap companies, will become cheap again, and I'll be back in that space. But for right now, the biggest and the best are where I am.
Okay, very interesting. So as I was getting ready for this interview, I looked back to our last VRIC interview, which would have been January 2020, just because I wanted to see what did we talk about at that time. And one of the things, the headline was, get into, I think, precious metals for easy money, uranium if you're patient. So I wondered if you could do that dichotomy now. So we talked a little bit about easy money. What's the be patient side right now?
Boy, I hate to say it, and your listeners are going to hate. Well, they hated me then for uranium. So coal.
Okay.
Yeah, coal. Greta doesn't like it. Angela Merkel doesn't like it. Probably most of your listeners don't like it. But for the poorest half of humanity, when those people come into a house and flip the switch, they want the lights to come on. Charlotte, many of your listeners won't realize that 1.2 billion people on Earth have no electricity. Another 2 billion people have access to either intermittent or unaffordable electricity. Those people want to live like you live. They want to live like I live. And despite the fact that Ms. Thornburg doesn't like coal, 3 billion people on Earth want access to affordable electricity. And we aren't going to deny them that. That affordable electricity, whether we like it or not, comes from coal. The largest demand year for coal on record was 2021. The largest demand year for coal on record is going to be 2022. Coal will continue to be an important supplier of electricity for 25 or 30 years, and the companies are selling at 2 to 3 times free cash flow.
Right. And I do think people should pay attention because you told us previously about oil and gas. We talked a couple of years ago about agriculture. Those things have come to pass. So question, I guess, next would be if you're getting exposure to coal, how do you do that?
I mean, there's a couple ways to do it. You can buy the multi-commodity companies like BHP, which is seeking to divest of coal. You can buy Glencore. You can also buy, buy the direct coal companies. There's a variety of opportunities depending on where in the world you would like to own coal. Another theme, Charlotte, and I'm taxing your memory, but when you first started interviewing me, you were, I think, probably 7 or 8 at that period of time. I talked about water. The water thesis is really coming to pass. The U.S. South and Southwest is in the depths of the deepest drought of my lifetime. Water has been allocated for my whole lifetime politically, which is to say, water naturally flows uphill to votes rather than downhill to utility, to money. You can't allocate water that you don't have, so water is suddenly becoming scarce. And the consequence of that is that agricultural companies like J.G. Boswell or Limoneira that own large amounts of water are starting to come to investors' attention, not because of their agricultural output, but rather because of the water that they own.
Right, and it's interesting you mentioned water. I had Joe Mazumdar in here earlier, and he was saying one of the things he looks at in particular right now is, when he's looking at companies, do they have access to water? So clearly it's an issue for the mining industry as well.
It is.
Okay, so the last thing I want to touch on before we let you go is, the war between Russia and Ukraine, we've touched on it, but in terms of energy, right? So we're talking about energy, how everybody needs it. We need these different sources such as coal. We need to keep using it. So I guess what I've been seeing happen is like people seem to be, realizing that it's hard to get. Not everybody has it. Can you speak about that a little bit?
Sure. And that's a great question. I'm not going to pass any moral judgment on the war. What the war has done is focused people's attention on geopolitical security and resources, particularly as an example in Japan, which was for a while anti-nuclear and is now pro-nuclear, as a consequence of the fact that their supply chain and everybody else's supply chain has been stressed. Now, Russia, 40% probably of the world's PGMs, 30% of the world's nickel, 40% of the world's uranium enrichment capacity, 35% of the world's natural gas exports. Russia was a Lollapalooza to go out. But it focused our attention on two things: the fragility of supply chains around the world and our lack of ability when supply chains get disrupted to increase supply. If Russia stops selling the world nickel, finding nickel, permitting nickel mines, building nickel mines, financing nickel mines, it takes 10 or 15 years. It can't be done overnight. And Russia has focused everyone's mind on the fragility of the supply chain and also the lead times and the capital needed to expand those supply chains.
Okay, yeah, you've articulated exactly what I was trying to get at there. So as we're wrapping up, we're at VRAC. We should enjoy this conference, but you have your own event coming up in July. I was hoping you could give us a preview.
Kind of you to ask that. We, in this case, Rule Investment Media, has, as you know, put on conferences for many, many, many years. For 2 decades, they were here in Vancouver. Given COVID and given 2 governments' response to COVID, I didn't have the courage to bring all my American friends up to Vancouver this year. So July 26th, 27th, 28th, I believe it is, in Boca Raton, Florida, Rule Investment Media is putting on the Natural Resources Investment Symposium. Great headline speakers, the Nomi Prinzes, the Daniela DiMartino Booths, David Stockman, Jim Rickards, great speakers that sort of give you the overview. More importantly, probably a collection of 10 or 12 people who have built multi-billion-dollar companies in natural resources, telling you about how they did it and how the lessons that they learned make you a better investor. From an investor point of view, probably the best thing is, like every other investment product, investor education product I've done in my life, comes with a 100% money-back guarantee. If you come to the conference, don't think you got your tuition's worth. Send me an email, I'll send you a refund, no questions asked. The financial risk is all mine. because the financial risk doesn't matter. One more thing, the exhibitors at our conference. In order to be an exhibitor at our conference, your stock has to be owned in accounts we manage or in our own account. Now, sadly, Charlotte, it is not true that every stock that I own goes up. But what is true is that every single exhibitor has been vetted by us. We know them well enough that we own them. That's the best guarantee of honesty that exists.
Okay, well, we'll look forward to that. Hope to see you there. And for now, thank you for coming on to talk about what's going on in the resource space.
Thank you for the opportunity. I enjoy speaking through you to your audience.
Great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Rick Rule.